TGIF Warriors. Hope everyone had a great week. The pattern in plays had a great week. Blake closed out a US dollar MEX for over 1%. A nice Aussie Kiwi by Blake, a little push trade. Andre's really been on fire, so, you know, really concentrate on some of his harmonic works. And of course, Greg caught some of the pound to the upside. So just to exemplify, Andre again is up 2.64 on USD MEX. Okay, so some great trading by the team. Don't you agree? So Friday's a great day to take a subscription and have the weekend to navigate so that you're getting these pattern and plays, which are pushed alert wherever you go. You could be at work, you could be on vacation, you could put us in your overnight bag when you get in a airplane, and you'll know that the team, you have 12, 14 eyes working for you, giving you breakthrough support levels, as well as all the great analysis for you to put into your intelligence gathering on the traffic light page and all the methodologies. Anyway, I want to congratulate Andre. You know, who stepped in and really, you know, I interviewed him off Twitter, and the guys went out and found him, and what a gem. Great hire, Blake and Steve and Stelios. Really outstanding. It's not easy to step into someone else's shoes and deliver. There's a lot of pressure. So Andre is definitely a warrior. So pay attention to his work. I have been. It won't hurt you. In fact, fade him at your own peril. Yeah, I even had one of my mentees ask me about MEX this week. Mike asked me. Mike's probably in the house. I was supposed to have a pretty good guess. He's a crypto star, Tone Bays. We'll see if he shows up at the top of the hour. Anyone who's a crypto fan knows about Tone. So that could be a very interesting interview. I'm going to ask him about the war on cash and if crypto, you know, we all know there's been lots of articles about the war on cash by governments, what India did, go to a bank now and try and withdraw large sums of cash, and you'll be asked all kinds of questions. And, you know, ask Michael Cohn about doing large transactions and what happened. So, great week by the team. Congratulations, team, dream team. And see, this was a look. Outstanding catch down here by these guys. Here's USD MEX. So, I don't know. I keep looking for the dollar to fail, and you know, we put in a higher low, and it looks like it has some more upside. Not a bad week for the dollar considering everything that's been going on. I think we have an up week. So it's holding. Maybe it still wants its 91, 92 level. Something I was not right on, but I haven't really given up on it. It's a great week in the Swiss. I thought it was going to fade at 70. And then it came off the 61.8 pretty good yesterday at 97.12, and now we're getting a reversal bar here, and I'd say the divergence is somewhat intact here on the 4 hour, but even more so intact here on the 1 hour. So gutting out underwater on the trade from 670 and 712, but I'm going to give it a chance, let it breathe, and see if we could get at least some type of correction. You're going to know that it's a failure back under 650, but definitely had more strength than I thought it would. I'm not surprised by yen strength though, and that's something that I've been talking about for weeks. Steve Volge has too, but we could be getting to the point where it's could be in its terminal stage. I was looking for a third drive. Here's one, here's two, and we'll see if we could get up to 108.10, 108.20. I received a tweet from Brian Twomey, who's pretty good, and he thinks if we start closing above 108.05 or so, that it's going to be a big move. Actually, it does measure 109, 110, just if you take the measurement from this high, which was, let's call it 108, and this low, which we diagnosed 340, 340 from here, this low is going to give you 110. So there might be some type of pullback from this 108.10. We're not going to confirm up here. That's something I'm keeping an eye on. Left some good money on the table here in Aussie Kiwi. Look at what contained it so far, your daily moving average, and went right to the 50-day. So if it can not break through this level right here at the 50-day at 106.70, I'd be looking for some type of maybe right shoulder to develop, maybe down here around 105.80. I'd be interested in buying it. Call this a left shoulder, call this a neckline. Perhaps that's what we're getting. Call it right off here. So you have it breaking out of a falling wedge, right? And my rule on falling wedges are 100% retracement, so I think we could go to 108. So I'd be looking for 108, which is where the 50-week comes in. So any breaks next week, I think could be a decent opportunity. Get your fibs out and look for reasons to buy it. I'm thinking 580, 560 in this range next week. Wrong under the lows would be a nice buying opportunity for that move to 108. Yes, I'm a master in my own mind, Craig. How are you, Patrick? How are you? Brian, hope you caught that. Nicola's better looking than Andre. Well, you know, that depends. If you're a woman, Andre, you know, Andre's a stud. Okay, so it depends on your sex, right? And Michael Bergman, how are you, Michael? I'll see you tomorrow morning. Hope that what you're learning with me on the weekends is helping you out. You had a great week. And I'd like to hand the ball over to someone I admire and always wanted to work with and have been able to do so for a year. I'm very happy being part of this team. I've never been involved with so many, you know, intelligent, great thinkers when it comes to the market. And more than that, really nice people that care about others, you know, that care about, you know, we're like a family, this ForexAnalytix team, and you guys are all part of it, part of our large family, and in the chat room, and the great job that Amanda's doing in there. So we keep growing, and you know, that's a great sign, because you're either growing or dying. And I guarantee you that ForexAnalytix is going to be here for the duration until the guys sell their business for about, I don't know, $50 million in a few years, and they just want to go hang out on an island somewhere. So thank you, everyone, for hanging with us, the thousands that have registered for our free webinar, and the hundreds upon hundreds that have become subscribers. So join the ForexAnalytix family this Friday. I've said this before, you're risking $1 to check it out for 10 days. And if you don't like it and you want a refund on your buck, let me know, and I'll get a wire out. It'll cost me $20 to wire you $1. All right, so let's see what the guys have for today and the week ahead. And curious what Blake is thinking of the dollar. It's pretty stubborn here, isn't it, Blake? And I have no idea what to do with it or the euro.
Hey, good morning, Dale.
How are you, partner?
Good. I got up a little earlier than I normally do, and so it's always a bummer at the end of the week because I'm so tired going into Friday. But
I know, bro.
Yeah,
but you're young. You know, you're a young man.
I am. So let's you know, as far as the dollar goes,
there's
Blake,
a little problem. There you
Blake,
go.
Yes.
Yeah. Go ahead,
good
Steve.
morning, mate.
Better.
Yes, exactly.
Sorry,
Yes.
my microphone was.
Steve's our audio engineer.
Thank you.
Steve.
Thanks. All right. Yeah, and as I was saying, the dollar you know, the euro has come under some pressure overnight. I expected it to move lower through this minor trend line. It did. I closed out my euro short this morning, and that was short from yesterday. And you know, there's been you know, some comments about where we're at, and what I'm going to do is I'm going to pull up a clean chart. Okay, so if you take the euro US dollar, and let me pull up a chart that is not one I draw on. Okay, this is, okay, the euro. And so what I've noticed here and where we're at is we are, let's take this low from right around here. Okay, we are testing this trend line. See, and I'm connecting, you know, as many points as possible. And you have to realize that we broke at the beginning of this month, we broke below that trend line briefly and bounced back up. And here we are again testing it. Now, you know, if you connect the where we went on that one day, then we are not below that trend line again. We're still above it. But I think the dollar index is walking a pretty fine line here as far as bears go. I mean, here's the dollar index, and this is probably the better chart to look at as far as, you know, where the dollar is at. I mean, the dollar is probing some pretty good resistance, and the dollar is, in my opinion, it's at that place where if you were short, you've got to start being a little careful. And we've gotten some pretty key developments this week, and I'm gonna, you know, you can go to the euro dollar, go back to the euro and say, okay, well, you know, I see what you're talking about, Blake. I know we're, you know, on support again, which I'm looking at this dotted line, and obviously I'm most concerned about, you know, this 122 level. I mean, that's where things get, you know, start to really show a big reversal, as if we get down there. But if you guys haven't noticed, like, here's the euro weekly chart, and I'm going to try to zoom in, so just to kind of give you a look at the candle. Okay, the euro weekly candle, that's a pretty bearish candle. Now, we've seen them multiple times. So we saw it here. This is a long upper shadow doji. Here, and then, you know, currently we've got another one developing. Now, if we close on our lows of the week, that's going to end up being a gravestone doji, or even, you know, quite possibly a worse formation. So I think that we've got to be really careful here, and especially if you look at the cable, and here's the pound, that's an ugly candlestick formation, right? You look at the pound, Dale, and that is pretty bearish. Okay, and I mean, we had not only is it a bearish candle, but we also had a false breakout too. You know, we broke above those highs, above you know, towards 144, and then reversed. So when I look at, you know, like the euro, or I look at the pound, and then you go, you know, you can look at the Aussie. The Aussie's pretty gnarly candle here on the weekly. Here's the Kiwi. You know, that's a dark cloud cover. The Canadian, we're not done yet. Obviously, the Canadian still we have data coming out in a little bit, which is inflation and retail sales. And by the way, sorry, the Canadian is.
I love your Mr. Magoo charts.
So the dollar Canadian is actually has fallen about 40 pips, a little bit more than 40 pips since Europe this morning, because the market's expecting stronger inflation data out of Canada. So everybody's expecting it, and so the Canadian has been strengthening. But if you go over to the weekly dollar CAD, I mean, if we close higher and the dollar Canadian closes at the highs or higher, then that's going to be a pretty bullish candle. And the Canadian will know in about 15 minutes, well, probably in about 30 minutes, what direction we're going. Dollar Swiss, bullish candle. Dollar peso, extremely strong. Caught that one out of a descending wedge, and it just, you know, ran like crazy. US dollar Norwegian krona, US dollar Swedish krona. Well, US dollar Swedish krona is just kind of bouncing around, but you guys get the picture that the dollar looks pretty bullish, and if the dollar closes near the highs of the day today, and let's get back over to the euro, and the euro is bouncing a little bit here, but if the euro closes at the highs of the day, or excuse me, if the dollar closes at the highs of the session today, that's gonna put in some pretty bullish looking candles for all the for across the board. So I think if you're bearish the dollar, you have to be a little careful here. You do because, you know, I see the trend line, you know, obviously going back over to the trend line. I look at the trend line, but I also realize that that you know, the dollar is looking pretty bullish against so many different currencies that it might be enough to break the dollar higher. And I didn't even talk about the dollar yen, and the dollar yen is just kind of bouncing around. And I as you guys know, even though the dollar yen is part of the dollar index, obviously, it's not something that I factor really into the rest of the dollar pairs, just because the dollar yen is on its own program. Really, it's kind of moving. It beats to its own. It beats to its own drum, and but that doesn't mean that if the dollar is moving, the dollar index is moving, the dollar yen can't be influenced, because it very easily could, you know, move with the rest of the dollar pairs as well. But I know that the dollar yen is facing some pretty good resistance as we approach the 108 level, just because it's the underside of that big triangle breakdown. So I know everybody else is looking at it too. So anyway, but if you look at the dollar yen is bounced from 107 to 107.50, you know, the last few days. So the dollar yen is even playing along with this dollar strength. But the real big one is like the cable. I mean, look at the pound. I mean, that is just such a nasty reversal from the highs. I mean, if I was long the cable, which I'm not, but if I was, I would genuinely be pretty worried right now. So anyway, that's my that's my thoughts. Now let's turn our attention to the Canadian. So the Canadian, we do have inflation data coming out, and retail sales too. Remember, the dollar Canadians had a nice couple of days. We're pulling back ahead of the data. Everybody's expecting strong inflation data out of Canada. So I think that's where this, you know, everybody's like, well, shoot, you know, I know Canada is going to post some strong inflation data, so I don't want to be short the Canadian in the face of that. The risk is if Canada's inflation comes in line or worse than expected, where, you know, we have like core CPI trim, which is basically is core CPI is their trim mean, expected at 2.1%. If that comes in anywhere below expectations year over year, that's going to be you know, not favorable. All right, 0.4% month over month for CPI is what the market's expecting year over year with you know, headline CPI at 2.4%. So and then retail sales are expected to month over month increase 0.1% to 0.4%, and so we'll just be watching the Canadian data here shortly. I'll be passing it over to Steve and Stelios shortly, as we wait for that as that data comes out. But overall, I think, you know, oh, and by the way, I got asked, you know, today, when does the Canadian turn bullish? It doesn't turn bullish until we get above 127. If we get above 127, then you start looking at let's see here. Okay, you can see that fib level, these fib levels. So once you get above 127, then you have 127.50, which is your 38% retracement, 128.25, which is the previous support, also 50% retracement. So that's where all that resistance will come into play if we get above 127, and then you got a nice, potential for a bullish run here in the U.S. dollar Canadian if that breaks. But one other thing regarding the Canadian, and actually more regarding crude oil, Donald Trump also tweeted this morning that he will not tolerate manipulated crude oil prices, which it actually weighed on crude. And you can see how crude actually took a turn this morning. When he tweeted that, crude came under some pressure. Now, crude is, if you guys didn't see it, crude hit 127% extension of this wedge break, 161% extension. Confluence gave us a really nasty shooting star. And if you use ForexAnalytix, you can see that yesterday candlestick formation, shooting star reversal. Crude posted a shooting star reversal candle, and crude's been coming off since then. But you got to watch crude oil because Donald Trump has crude now in his targets, and when that happens, that's you can say what you want about Donald Trump, but he does move the markets. And if he's got his eyes set on something, it could influence the market as well. So I think if you're long or bullish crude, you got to be a little careful with not only the reversal candle, but the comments that came out from the U.S. president today. And guys, I know Steve and Stelios will probably talk about this shortly, but they did publish with the help of some of the other team members. They published a blog on precious metals. So I won't take that away from the guys. I'll let them talk about the precious metals as well. But if you haven't checked out ForexAnalytix in our blog, it is free. So check out that blog post. I think I retweeted it this morning as well. And obviously ForexAnalytix tweeted it too. Dale, any comments before I hand it over to Steve?
The blog is excellent. And just one comment, I've done a little intelligence gathering I want to share with the room. Someone that I really respect in the S&Ps is looking for a break here to about 25.95. And that's a pretty good hit from here, Blake, about 100 handles, 90 handles, and then another big move to the upside. So it looks like one more interruption, not a new low, not a washout, but should get a pretty good break in S&Ps from here. Sell strength looking for about 2,600.
I could see the S&P. We're above this little breakout point here. You can see this is previous support over here, but it was our resistance as we broke that wedge. I think you have to watch if we break yesterday's lows. We break yesterday's lows, then that's going to put us under pressure a little bit.
Kind of a path for it to go to correct that uptrend. So,
right. As you can see, we're in a I think more of maybe a bearish wedge formation. So, and this may be incorrect. I mean, as far as I'm concerned, my drawings are never perfect, and I don't know how
the never are.
They never. Yeah, you kind of have to adjust them as you go, and this might be, maybe the false break over here led us to the, then this wedge is a little bit tighter, which means that, we're going to build this apex probably through the summer, before breaking higher or lower, if we're actually building this wedge, and then it becomes a bearish wedge, meaning the chances are it breaks lower, but it doesn't mean it has to. So anyway, just some things I'm looking at.
Pass it around, one of the advantages of having interviewed almost 1,000 people, Blake, and I know you talk to a lot of people. Besides the team, you get a lot of intelligence from the guys at your fund. And one of the advantages of the interviews is I've formed some relationships, and they kind of keep me informed with some of the things they're looking for. and that gives me, more input to share with everybody.
Awesome. That's true. Hey, Steve, I'm going to pass it over to you. I got to get hopping really quick because I got to connect everything up.
Have a great weekend, buddy. Have a great weekend.
Hey, you guys all have a great one, and TGIF, everyone.
Bye-bye, Blake.
By the way, guys, funny that you should mention the S&P. Greg issued the pattern in play this morning, which is bearish the S&P with a target of 2590. So he agrees with you.
All right.
He agrees with you, Dale.
That's not me, but another good E-waiver. So there's some confluence. That's a big trade from here.
Yeah,
so,
absolutely.
Yeah, I love when E-waivers hardly ever agree, and that's I think it's a layup now.
Perhaps he's a client of Gregor's.
Huh?
Perhaps your friend is a client of Gregor's. He wouldn't be the first.
Yeah. Okay.
So how have you been, Dale?
I'm good, Steve. I'm glad it's Friday, buddy.
Indeed. No complaints about that.
I'll get to sleep in till about, 4:30, 4:45 tomorrow morning. I'll sleep in a little bit. But
which is going to be a big improvement.
Great week. Great week with the pattern in place, man.
Indeed.
Andre's knocking it out of the park.
You see, he's getting hotter by the week, right?
Yeah. And like I was saying earlier, it's not easy for someone to step in and fill someone's shoes that has a pretty big reputation. That puts additional pressure on someone, and he has weathered it like a champion.
For sure, there's no question about it. By the way, I want us to start by having a look at the DXY, because I know that the dollar has been rebounding, but no matter how you view this move in the dollar, I need to reiterate here that nothing has changed, meaning that if
Lost you, Steve.
Steve, we can't hear you.
you want to see this as a triangle, which I just drew, like.
Yeah, you're breaking up a little bit, but
Now we can hear you.
Okay, my connection seems to be fine. Whatever. Okay. So I was saying that no matter how you want to view this recent consolidation in the DXY, you want to view it as a bear flag, you want to view it as a triangle. Just by seeing 4 days of a rebound doesn't mean anything. Especially the first 2 days were very reluctant. Yesterday was somewhat of a strong day for the DXY, but what remains the case here is that we have no we have no technical event, right? I mean, we definitely haven't broken below this descending trend line. We definitely haven't broken above 91. We haven't even broken above this little descending trend line here. So in my opinion, I don't have any reason to view this as anything else than a rebound within a very tight consolidation. And the consolidation usually in a strong trend is a continuation formation, right? So I just want to begin by revisiting this. Now, having to do with the euro, I know that Blake was just showing an ascending trend line support, but on the other hand, we also have a very clear pattern here. It's also a triangle. Triangles are usually continuation formations, so I have to say that, in my opinion, there is no technical event here either. I would really want to see a daily close below 122.30 for me to consider that something has started happening, because that would be, in essence, a level that we would print a lower low even in a short term, and also break lower from this triangle's trend line support, right? So until then, I just see a triangle. We remain in the middle of it for the time being, and it is what it is. Now, having to do with the USD Swiss, it overthrew, a possible area of resistance. We had a triple confluence of resistances that didn't do anything because we simply slashed through it, but tested, horizontal level of resistance at 19,750. It's pulling somewhat. It's pulling back, not a lot for the time being, but you need to also consider this. Having a look at the Euro Swiss, the Euro Swiss actually penetrated through 120 today before reversing lower. I actually established a little bit of a position at 1985, 1/4 of a position to begin with, and this is something I want to be monitoring closely because 120 is a very, very strong area, a very strong area of support for years. So it might act as a resistance. I want to see what's going to happen from here, but definitely if the Euro Swiss starts pulling back, at least somewhat from here, that's so in essence, if Swiss starts strengthening from here, it's another reason for the USD Swiss to see some headwinds. So I want to see how this day is going to close. I don't have a position in the USD Swiss yet, but I want to see how the day actually is going to close more or less, and reassess what's happening from here. Now, at another pair that we haven't visited in some time, nothing much has happened. That's why we haven't recently had a look at it. But it's a good thing of having a look on occasion, since it's a quite popular pair, the Euro Yen. I still see this as a potential pennant, but on the other hand, we remain above this 130, 31, 60, 31, 80 horizontal support resistance. You can call it supply demand zone, and as long as that's the case, I remain mostly neutral. But if we do see a breakdown from this wedge and also from this 131.60 area, I will be looking for some continuation, likely once again towards this area, the 129, 128, and 80, 90. So this is another pair I'm monitoring. Nothing actionable here, in my opinion, but I'm still monitoring. And something we also.
Steve,
yes?
sorry to interrupt.
Data.
Can we have a look at the CAD, because we had
we had soft CPI. I see it 1.4 versus 1.5 expected. Yes, definitely. Let's have a look at it.
Yeah.
Thank you for reminding me. And as we see, the rebound is resuming here. Yesterday, the day before yesterday, we had a very strong candle. Yesterday was a continuation, as you see. So we need to see this rebound, what kind of rebound is going to be. One thing I can say for sure, I'm still holding half of my position, by the way, because my entry is a lot higher, and I've
If there's something wrong with your connection, mate, you're breaking up.
trailed my there's nothing running here that, see, I don't think there is something running here that I can switch off. So nothing much I can do. Yeah. Okay. So the USD CAD, as I was saying before, I think as long as it remains below 128, let's call it roughly, it's definitely not bullish. So I'm monitoring this rebound. If I see a reaction from 128, I might actually add to my half a short position. Until then, I'm also viewing this as a rebound. So another pair that actually moved quite a lot, and this one moved significantly, it had a monstrous day yesterday, was the USD MXN, right? Because we saw an amazing reaction. I mean, it started like a little rebound, and yesterday, the pair moved from 1806 to almost 1850, which was my second resistance area. So I have to say that such a huge day like the one we had yesterday is not a day that you should dismiss. We're currently retesting broken triangle support, so it's also it also confluences with the 50 and the 200 DMA. So I have to say that this is a strong area of resistance, but I can't dismiss the day we had yesterday. So I would be very, very cautious being short here after what happened yesterday. As I said, at least a pullback from this triple confluence of resistance is likely. But after such a day that we had yesterday, I would be watching this 1834 level as support, and we take it from there, because that was a huge move, and really quite unexpected. So USD MXN is definitely my radar now. And this is one more thing that shows that USD has been putting an effort to rebound. The USD NOK also broke from a very tight descending channel within a triangle. But I have to add here that this was a little technical break. It also broke above the 50 daily moving average. But on the other hand, USD NOK remains trapped within a triangle, within a triangular consolidation. So for me to be more enthusiastic about something happening, I would need to see a break above this trend line, in which case then we can be talking about a stronger rebound that could even take the pair up to the 61.8 at 812. Okay, until then, I think that there's still not much to do or much to see here. Now, having to do with the metals, you can read all about them on the blog post. I went over them yesterday one by one. I have to say that nothing much has changed since yesterday. Key levels are still holding in many of them. But one pair I wanted to show was the euro pound, because we haven't had a look at it during the past couple of days. Euro pound actually reacted from channel support. I initially had drawn the channel like this, ignoring the end of that week, because there was more points of contact. But as it seems, it found support in a parallel that takes into account this little week. So we have to take it into account. That was a very strong 3-day rebound, or if you count that we were on the highs at some point today. But we did find now resistance at the previous high here. It was a previous low as well there. One thing is for sure, nothing has changed in my outlook, meaning that as long as we remain trapped here, obviously there's not much to do. But a lot of people got trapped being short there. But I would still favor a resolution to the downside at some point towards 83. So I would still favor a break lower and the move to 0.83. But let's be honest, we're back in the not exactly range, but within the channel. So it seems that this pair requires us to be even more patient. I mean, it's already been doing whatever it's doing since the middle of September last year. I mean, of course. So it's already been more than 6 months. At some point, obviously, there's going to be a break, and when that happens, we're going to probably see quite a violent move, because when a market is usually coiling for a long period of time, the resolution usually brings some volume along with it. But we have to be more patient. Another pair that actually moved significantly yesterday was the Aussie USD. I was writing in the chat room that when we started getting negative on the day, and then when we started actually penetrating through the lows of the previous day, I said that, listen, 77.40 is a very significant level. If we close below it, there should be continuation. If we actually manage to hold the 77.40 area, then no big deal, nothing much has happened. But we did close below 77.40, and this indeed brought continuation. So yesterday's major rejection and outside, a big outside black candle, the rejection came from the 200 DMA, should not be ignored, which means that it's very, very likely that we're going to be pushing towards confluence of supports once again. And where is that? At 76.40. 76.40, in my opinion, a major level. If I zoom out, you can see why. Because most importantly, because a trend line that defines the trend since the beginning of 2016 passes exactly from there. So in essence, if we broke below there, that would trigger a continuation to this corrective move higher that started at the beginning of 2016. It's also the 78.6 of the last move higher. There's also another internal trend line here that passes more or less from there. So as you see, multiple supports at 76.35, 76.40. I think that the pair is going to be in serious trouble if we break below it, but we're not there yet. So I'm just giving you a big level. I would expect that 77.40 should act as resistance from this point on. So unless we break above it once again in the near term, I would be looking lower, but no major damage done yet. Kiwi has also rolled over and accelerated, very fast. It was showing actually Kiwi and the Bund more or less fooled me because both of them. I mean, I was monitoring. I didn't intend to take a position anytime in the near future in the Kiwi. It didn't look likely to me that I would be involved with it soon. But it fooled me because the beginning of the move lower showed that it might be a corrective move, but then 2 consecutive days now it accelerated and it's showing that something totally different. In any case, 71.80 remains a very critical level because it's the range's bottom. It has already acted 3 times as support. So we definitely need to break below there to be looking lower. Until then, I would remain cautious anyhow because we remain within the range. But since I mentioned it, the Bund completely fooled me because I was monitoring the Bund very closely and I wanted to be short. And I actually wanted to be short from this confluence of resistances that we found there. I wanted to see what kind of a reaction we got. So, initially we got a reaction that was looking 100% corrective in nature, since it was slow, it was choppy, it was overlapping, it was channeled very nicely. Even the RSI was showing that, the move was very well behaved. And suddenly yesterday, the bottom fell off. So, in this case, the market completely fooled me. I wanted to be involved and I didn't get it, and ending up being involved. I believe there was a continuation to the downside, but, I'm not in it, so it is what it is. Having said that, we should be a little bit careful because this is an interesting area of support that we're testing now at 159.50. Regardless, I think this move lower, is indicative that this was indeed a corrective move higher, in which case continuation lower is very likely. In essence, Bund following what the treasuries are doing, and what the treasuries are doing is that they've already broken down. You can say that they're testing once again horizontal support, but it doesn't look likely that this time it's going to hold. The move higher was clearly corrective in nature. We had said that multiple times. And if we do close below these lows, the next area of interest is going to be the 119 area, which is the 161.8% extension of this last correction. So, I'm expecting that yields, and here's the equivalent chart of the yields are going to keep moving higher. This comes as no surprise because, as you see, we haven't shown them in some time, but you see what we had drawn here and what we had said, that the move higher was more impulsive in nature and the move lower in yields was clearly corrective. And now what have we done? We've broken
4 flag and now 5.
Something like that. So it looks likely, Dale, that we're at least going to test a very significant psychological area, which is what the 3% yield in the 10-year, right?
I think Jim Welch is looking for about 323 or something like that.
Oh, it might easily happen because even if we want to just measure a target for this Bund flag, it's very easy for us to do. Let's do it as we speak.
Wow, that would be way up there.
Let's take a fib extension. Let's take this low. Let's take that high and this low. Yeah, as you see, a bull flag target comes at 336, right?
Yeah.
So
so
quite likely.
So yields go up. Greg is right on the S&Ps, and then 5 ends, and then we get rates. People be panicking about rates. I mean, what's going to be interesting is if the longer term paper does this. It's going to be interesting to see what happens to LIBOR and some of the short term stuff.
I totally agree with you.
If maybe the yield curve, the banks are kind of saying that maybe the yield curve. What's the opposite of flattening?
Steepening.
Steepening. Yeah, and that's what the banks want. So it's going to be interesting to see if we steepen on this move or continue to flatten. I have no idea what's going to happen.
Steepening, inverted
Yeah.
yield curve, right?
Yes. Yeah.
I mean, it's always a prelude of recessions. So
Right.
yeah, that's something that we definitely need to pay attention to.
Right.
This is the outlook with treasuries, and what's happening actually with treasuries is obviously one of the reasons that we see the dollar catch a bid, right? Because the market is noticing this significant breakdown and breakup equivalently in yields, breakdown in bonds, breakup in yields that we're currently seeing. So that is obviously affecting the dollar and the dollar catching a bid. Now, I know that Blake has already mentioned the pound. The pound definitely showing some weakness from here. It got a nice. The rejection came from a nice confluence of resistances. It was the 78.6 of the post-Brexit move. It was also this trend line I had shown, this intermittent trend line that had acted multiple times as resistances. We only have.
Lost you again. Steve, lost your audio. At least I did.
Yeah, there's something wrong with
this one here.
I don't know what it is.
You lost your audio for about.
It is very weird though, because okay, sorry about that. I have no idea what's happening. My audio seems to be working fine. I mean, I see my microphone gain, work just fine. So, and on the other hand, my connection seems okay as well, because I can hear you without intermissions or whatever.
Yeah.
So yeah, but whatever. So having to do now with the cable, that was a nice confluence of resistances up there. We got rejected. The move lower, seems quite strong. But as I've said multiple times in the past, every time we saw a correction lower, for me, before I can call this move higher as over and done, which we have said multiple times that we're viewing this move higher as a long-term corrective move. But before we can say that this long-term corrective move higher is over, I would at the very, very, very least want to see a break lower from this channel's resistance that has acted now as support, right? So I want to see a break below there. Only if I see a break below there, I will start, considering the possibility that, okay, that might have been it. This corrective move higher might have been over just before we actually reach the 50% fib from the high we had at 170 multiple years ago. It was in 2000. It was during the summer of 2014. Until then, I'm just viewing this as another correction. I know it seems that momentum is quite strong, and I'm taking into consideration that within like 4 trading days, we've now retraced like almost double those trading days. So I am taking that into consideration, but we haven't even had a lower low printed yet, right? So let's see whatever reaction we get to the upside, what kind of a nature it was going to have, and then we can reassess, and before we can actually call that we've switched our position to being bearish. Now, having to do with the gappy obviously fooled me. I was looking for a high. It stopped me out, and now it seems to have reversed. But also here, for confirmation, because this move higher did look for a long time corrective, and I said that as long as the 78.6 is respected, there is still a chance that this move higher was corrective. Before we can confirm that, though, I would want to see a break below this channel support, ideally also below this high that we had at 150.40. So a break below 150.40 is going to be my confirmation that this was an impulsive move lower, which I was viewing it as an impulsive. This was a corrective move higher, and at least one more leg to the downside is beginning, which might even take us at a lower low than the one we previously found. Okay. So that's what I think with the gappy. You have every reason to believe that it will move lower as long as we do break this channel, and obviously as long as we hold this high, because now we have a tradable high if we want to be bearish, right? So far so good. If we also break the channel support, I think that's all the confirmation I will be needing. USD CAD is still pushing to the upside, by the way, just penetrating through 127. As I said, 127.90, quite an important level, though. Now, having to do with a risk and the S&P, I have to say that it's likely that the S&P is going to follow lower, so it's going to make an inverse move to what the dollar is doing now. But we're really not seeing confirmation yet, because even if we go down to a 4-hour chart, I'm going to tell you that there is no major technical damage being done yet. We're even holding the 200 simple moving average on the 4-hour chart. On the other hand, of course, somebody can claim that this looks like a little bear flag to the move we had yesterday, and that might be the case. But we need to see quite a lot more before we can, with conviction, look lower. Okay, we've said many times that it's not easy to read what's going to happen here with price action yet, because we remain within a triangle. What's going to give us an idea of when we're going to break out and in which direction is going to be the next move to the downside and its nature? Is it going to be slow? Is it going to be fast with momentum? In essence, is it going to be impulsive? Is it going to be corrective in nature? Once again, we do need more price action to be sure. Definitely, it won't come as a surprise if we go lower from here. I would be watching as a first area of support. I would be watching the 2665 area, 2660, 2665. If we do penetrate below that, I think that the chances for more downside increase significantly. And don't forget that there is also a scenario that we can even push to new lows and still be in a larger corrective move. We had talked multiple times about it. That scenario is the possibility of, let's say, an ABC. Okay, in which case even a move towards the 2450 area, or even a little bit lower towards the 2400 area, can still prove to be part of a larger correction, which, expecting a larger correction in such a huge uptrend, is not impossible. Yeah, Dale, go ahead.
Well, I didn't have anything to say.
Sorry, because you unmuted yourself, and I thought that, you wanted to ask something or mention something.
No, I'm just paying attention.
No, I have no doubt. So let's go through some of the questions and see what kind of things people want to have a look at.
We have a couple of people asking about crude. I think it's something worth having a look
absolutely.
at, right?
Absolutely. Yes. Absolutely. Let's have a look at crude. Okay, here is crude. Nice rejection yesterday from the 127.2, meaning that we actually did not close on a daily closing basis above it. This can be a level that will, form a significant high, but once again, I wouldn't be jumping the gun. This is a clearly defined uptrend. So far, the move lower hasn't been impressive or whatever. So wouldn't surprise me if this is just another little consolidation before another push to the upside. I want to see more evidence to call a high, to call a top in crude. Okay, so I'm still actively looking for a top, but I definitely don't have a confirmation yet. I would tell you if I saw it. It's yeah.
Sorry to interrupt. Probably worth mentioning, crude is very high on the DSI. It's above 80, so maybe it's going to take a couple of days, 2 or 3 days to work off overbought conditions and then resume.
Quite likely actually. Now, a fast, view of the metals once again. Gold is holding near, the highs. As we said, there is nothing to see here until we see a break, a daily close actually above 1355. So until we do see that daily close, you can remain neutral. Personally,
Look at the weekly on it, Steve. With the great week silver had, I believe gold is lower on the week now. Yeah.
My bias is that it should break. Much to see here on the weekly basis. Silver is holding up quite nicely though, because look at it. Today it was quite lower before, and now it has almost pared back all its losses, or the vast majority of them. So silver is holding quite nicely. As we've said though, 1750 critical zone for silver. Until then, I think that we don't have a major technical event, although big days like the one we had the day before yesterday should be taken into account, because usually you don't see such days before a reversal, usually. So that means that I'm maintaining slightly bullish bias, but as I said, there is no technical event until at least we see the upside eventually. But I wouldn't be doing something until that happens. It's one is totally different with the other. Another pair that is holding up very nicely, unfortunately for me, because I really want to buy it at 1,000, is palladium. Palladium, had a very nice reversal from the 61.8 yesterday. I had spoken about that level in the chat room as well since the day before yesterday, actually. Today it showed like it's going to have some continuation. Unfortunately, it has pared back all its losses. I'm really hoping that the market will find a few more days of weakness. I would really love to buy it near 1,000. I think the nature of the move higher is so clearly impulsive that I can't think of being short. I just want to. I mean, I was short. I made a very nice profit. I was lucky to exit right at the bottom. But now I want to be long this one. I really hope the market gives me the opportunity to do so. If not, okay, whatever. And copper.
Your volume's out again, Steve.
Copper is holding quite nicely. Yesterday it reversed. Unfortunately, it's not my volume. I can see it. I don't know what it is. We'll have to bear with that. Unfortunately for today, I have no idea what it is. Perhaps something with the software, because my computer restarted while we were broadcasting before. So I'm guessing it has to do with that. I also got an error about recording when I came in. So perhaps something that has to do with that. If we do see a daily close above 33.18, I would be looking quite higher towards 3.5, 3.42, 3.56. Two targets there, the 127.2, the 161.8. These are the targets I would be looking for. So in essence, I would be looking for new highs. The question. Okay, Nifty. Well, I don't think. Yeah, do you have the interview? Oh, sorry, I didn't notice.
Yes, Steve. Maybe it's a good time with the mic.
Okay.
Tone is here.
Absolutely. Okay. Have a great weekend, everybody.
Okay, and I'm going to
enjoy the interview.
Tone, welcome to Face. I'm going to make you not a presenter, but a panelist, and then we'll get rolling. So I'm going to take the screen back. Okay, Tom, waiting for your mic to be activated. Okay, let's slide up here.
Hi, I think I'm unmuted now. I think I can talk.
Okay, you're good. Very nice to meet you, Tom.
Hi, how are you?
I'm doing great, TGIF. It's been an exciting week like usual, and I'm sure it is for you. The universe of things that you cover would make my head explode. So, great, really great to meet you. I read about you a little bit. I went to your website and read about your bio. Everyone that's in the crypto world really knows about you, Tone, and I found it interesting that your first job was as a high school teacher, and you can't really get rich teaching high school students, can you?
Agreed.
Unless you're Richard Dreyfuss in Mr. Holland's Opus, and then you create a treasure that lasts longer than even blockchain. So then I saw, okay, you got involved in the financial world. You cut your teeth at Bear Stearns. What did you learn at Bear Stearns? Trading? Were you accumulating assets for the firm? What was your role there when you went to a big firm like that?
We were a subsidiary of Bear Stearns that did risk analysis. So we were creating these monster risk models that were used by hedge funds and fund of funds.
Okay. So, and you were there or in the business in 2008. So you saw a lot of these models blow up, especially.
Well,
no.
It wasn't like the models didn't actually blow up. I mean, the business did pretty well as far as our business was concerned in 2008. The problem was Bear Stearns blew up.
Right.
And some of that thing was just like you couldn't do proper risk for them. A lot of the risk models, especially the ones that we were doing, it's only risk under normal market conditions. And what happened in 2008 is classified as a black swan event.
Right.
So the business actually did well because there was huge demand for our services to see which hedge funds were, taking on more risk than others. The problem happened in like 2009, 2010 when so many hedge funds blew up that we had a lot less business because the companies that were paying us for these models blew up themselves. So then it became a little bit harder in like 2010. But JP Morgan took over our unit, and then actually like everything there is pretty much still functional. It's the same business. I mean, everyone needs risk analysis because fund of funds that invest in hedge funds need to know how risky those hedge funds are.
Can you apply those models to crypto?
Well, crypto, no. Bitcoin, maybe. So I'm expecting my old coworkers and the PhDs that used to write those risk models to have one specifically for Bitcoin now that it has somewhat enough data being around for like, 6-7 years with data. Okay.
So let me ask you, was it the meltdown in the financial market you called, all you're doing in, if you're not in blockchain, it's pushing IOUs around the globe. Was that kind of a transition point for you? What at first attracted you to blockchain? How did you get involved in it?
Well, I mean, I've heard about it in the early days of like 2011, mostly because of the WikiLeaks situation. I was following the Ron Paul campaign back then. I don't know what country most of your attendees are from, but here in the U.S., there was the big presidential election of 2012, the Ron Paul campaign. And I got on that whole libertarian side and started watching alternative media. And Bitcoin kept coming up, especially in the WikiLeaks case, where WikiLeaks was doxing a lot of U.S. government files from the war, from the Iraq war, and a lot of the other stuff. And when WikiLeaks got cut off from funding by Visa, MasterCard, and PayPal, Bitcoin pretty much kept them alive with donations. So that use case was very interesting to me. And then in 2013, when Cyprus base got shut down and money was confiscated, I started.
You're talking about the bail-in in Cyprus?
Exactly, the Cyprus bail-in. That's what finally got me off my butt and go buy some Bitcoin because it's an unconfiscatable asset.
Okay, is that the main appeal?
That's the #1 property, I believe. The fact that it's unconfiscatable, and also the fact that you can just transfer it to anybody. It's also pretty sound money. I mean, no one can just change its economic model. So there's lots of very useful properties of Bitcoin that just nothing else has.
So let me guess here, and say that, Tone, at the beginning you were an investor in crypto, and I don't know. I mean, I thought really most people that were early adopters had to either be naive or greedy to ride it up to 18,000. You know, I know that if I buy something at 2,000 and it goes to 8, I'm pretty happy with the trade. So
that is true. If you did it as a trade, I didn't really do it as a trade. I moved my money into Bitcoin, and that's where it's still sitting.
okay, so the valuation of Bitcoin, in any way, you have the stomach to ride out your net worth going through these types of swings because of.
Oh yeah.
Okay.
Absolutely, because I talk about trading Bitcoin, but I myself just have my money in Bitcoin. It's kind of like, you know, talking about trading the US dollar and holding the US dollar. And I mean, I still trade traditional markets.
You can't compare the volatility level of the US dollar and Bitcoin. So
Right.
I mean there are days you could go into the grocery store, and by the time you filled up your cart, depending upon whether or not there was a, you know, $2,000, $3,000 move while you were shopping, your groceries either cost a lot less or a lot more.
I agree on that, though. I wouldn't say groceries. Maybe if I was buying a car, it would swing a lot. If I'm buying like $20, $30 worth of stuff, the fact that it swung from 7,000 to 8,000 during that hour is not really going to change that by much. It'll change it by like 50 cents.
Okay. So let me ask you about the explosion of ICOs here. You know, a lot of gumshoe type analysts in the old days, they used to, you know, not only look at the financials and, you know, you're looking at white papers, but they also used to want to know, and I notice you talk about how important it is to know the people behind the project. They also want to know who's behind the company, the management. So do you actually do on the ground type of due diligence when you're checking out ICOs, or is that an area that you're not even willing to play in?
I'm not playing in that area. I mean, I've checked out enough ICOs like when they first started launching, and to me, every single ICO is basically an unlicensed, unregistered security, and
Right.
to me, it equates to a penny stock. Like even when I
was going to say that, it reminds me of pink sheet stocks, and
exactly.
and then they don't these guys go out and hire syndicates that they pay them a certain amount of money, and they come in and create buying so the people that hold those coins can get out?
Pretty
Like
much. I mean, I mean, besides the orchestrated pump and dumps that take place after, like before the ICO gets launched, they basically give out those tokens to influential people and their friends, and they hype it up so that these people can get out the moment it goes to an unregulated exchange. Now, again, I don't really, if the free market wants this, that's fine. I stay away from it the way I stayed away from penny stocks when I was trading traditional markets.
Okay, yeah, and it's a great metaphor for what they are. So let me ask you about, I see that you follow on your website Armstrong Economics. I've interviewed Marty a few times. Does he have any view on crypto that you're aware of?
I mean, I did at the time. I mean, I've been to a few of his conferences, and I've just been too busy to read any of his work the last 9 to 12 months. I attended his last conference in Hong Kong about a year ago, and ever since then, I just had no time because of all the content that I'm producing. I mean, at the time, Marty felt that Bitcoin is something that the government can just squash. He saw it more as a Trojan horse for the government to like just keep around, and people get used to having digital money and then the government eliminates fiat money, and then the government somehow takes control of Bitcoin. And I tried explaining it to him that that's not actually possible. Like, it's like government saying, oh yeah, you can do your file sharing with BitTorrent, and then we'll squash that. I mean, Bitcoin is just
Or how
too
about they start
decentralized.
their own tone? They start their own without it being Bitcoin. And
Sure,
you know,
I mean,
I was thinking that like that with why is the government letting this go? Because people are getting comfortable and embracing crypto. And you know, there is a war on cash, right? I mean, isn't what Prime Minister Modi did? Wasn't that kind of a test case of eliminating cash and the underground economy? And did crypto help the people in India out of that situation when that was happening?
It didn't help them much because you kind of need to already have Bitcoin. And this is the problem. Like, I think that the Cyprus event of 2016, 2015 was great for Bitcoin, but not for the people in Cyprus. I mean, sorry, for Greece, not Cyprus, sorry, Greece. I'm talking about Greece. The events in Greece with their banking shutdown in the summer of 2015 was amazing for Bitcoin. I think it basically reversed the bear market around that time. But for people in Greece, Bitcoin was useless because when your bank shut down and you don't have Bitcoin, you can't buy Bitcoin because you have no banking access. So I think once that happens, it's the people in countries like Italy and the surrounding area are like, whoa, I better get some Bitcoin because this can happen here.
Yeah, good spread. Okay, so here I am. I'm looking at the Bitcoin chart here. I have the daily chart up, Tone. You know, there were a lot of chart patterns that actually showed exhaustions at the high, and I'm looking at the chart now. You have a view, or it doesn't matter? Are you continuing just to, you know, convert all your fiat to Bitcoin no matter what the price is?
Well, I'm on the opposite side. I mean, I haven't had fiat income coming in years. I mean, all my income comes in as Bitcoin, so I actually have to sell to pay my bills no matter what the price of Bitcoin is. But I continue to make daily videos predicting the price of Bitcoin. It's kind of how I made my name in this space.
What are you looking for? Do you think the bear market ended under something?
I have been saying that the bear market has not ended. This recent drive to the upside in the last few weeks, it began with a short squeeze. I mean, you see that big candle right there around April 14th, around that time. That was a short squeeze. I mean, nothing really changed in the news. Nothing changed in technologically. It was like the biggest leverage short position, 2 times bigger than at any other point. And ever since the short squeeze, I mean, that's not how markets bottom. So I remain fairly bearish, but now we're crossing that 50-day moving average. I see we're coming up on your 50% Fibonacci line. I have other resistance in this area. The trend line, if you draw a trend line connecting the prior 3 tops, you get, I mean, like we're sitting at the cusp of a giant cluster of resistance. And you see that double top before that in February and March?
Yeah, I do, around 12,000, 11,688.
Right. See, I don't actually believe in double tops. I think that double tops are just meant to be broken.
Let me ask you that. I kind of feel that way about trend lines, that their destiny is to be broken. So you have a lot of knowledge in technical trading. Who influenced you, or are you just self-taught? Are you just
It's a bit in between. I'm not self-taught. I attended an introduction to trading class. One of my friends just convinced me to go with him and take an introduction to trading technical analysis class back in. I think if you change the chart to log scale, this trend line becomes more useful.
Because it looks like on the short squeeze it cut through it. But
you're not.
I do a lot of work with RSI, and I look at you know, whether markets momentum are confirming the low, and really this low, you had a little divergence between the last one, but not a great reading. So I don't know. I couldn't chase it up here. Maybe you buy a pullback to 7,200. So you know how to trade. You know how to trade. You teach people to trade, but you don't trade.
Well, I trade. I just don't trade a 24-hour market because I travel almost every single day, so I can't babysit a market like Bitcoin. I mean, I trade traditional. I trade options. I'm an option spread guy, so I still trade in the traditional markets. Okay. And again, because of my travel and my schedule, I've limited my strategies to earnings season, which is actually now. So these are like my 2 weeks of trading. And then I, go back to my busy life of evangelizing Bitcoin and making videos. The plan when I quit my Wall Street job was to just trade and occasionally speak at conferences. I didn't realize that how demanding the life of a YouTuber is, and so it's just impossible to do both.
Let me ask you this, Tone. Have you noticed a correlation between the price of Bitcoin and the S&P stock indexes, that it's kind of been a temperature or thermometer for the level of speculation? If you notice, the market bottomed here in April for a rally, and we're getting a rally in Bitcoin in April, and I'm looking for a pullback in the market. And in fact, Bitcoin peaked before the S&Ps did, kind of a leading indicator. Do you have any idea what could be behind this correlation?
No, I haven't really been paying attention to it. I think it's more of a coincidence.
Well, then you learned something from me today. So
no, I'm aware of it, but I just chalk it up to coincidence. I haven't. I don't think they're correlated.
Okay.
Fundamentally, I just don't see the connection because
animal spirits. We had a blow up. We had a parabolic move going in stocks at one of the biggest increases in a long time, and kind of a parabolic move in Bitcoin. If you know anything about trading,
right,
you could call that parabolic before it peaked.
I mean, I remain very bullish the stock market. I've been very bullish the stock market for years, and I remain very bullish on the stock market.
Okay. So let me ask you this. Do you think that Bitcoin will ever be challenged? It's kind of like the gold standard of crypto. Do you see anything out there in the future that could,
I don't.
Nothing?
I don't, because again, there are people like me with a lot more money sitting in Bitcoin. Bitcoin is actually considered store of value, but by a lot of the people, including myself. And if another crypto challenges Bitcoin, that means nobody would ever trust any crypto with a store of value property if their life savings can just disappear. So I don't see Bitcoin being challenged for that simple economic reason.
Do you have any other holdings that you believe in besides Bitcoin? I mean, the majors being Ethereum, Litecoin, Bitcoin Cash, anything else, or pure Bitcoin?
No, pure Bitcoin.
Okay.
I sold all my Bitcoin Cash first chance I could. Just pure Bitcoin.
Okay. And let me show your website, Tone. I appreciate the time that you were here. This is how people could find you and follow you.
Yeah, if you go to educational tools, and there's a section there that says learn trading. So I kind of laid out all of the tools that I like to use in trading. I'm not an Elliott Wave guy. I'm not a Ichimoku Cloud guy. But I'm big on candlesticks, chart patterns, support resistance lines, which I classify as Fibonacci's, moving averages, trend lines, and I don't use them as much. My order of preference when it comes to trading is candlestick patterns, number one, chart patterns like ascending, descending triangles, cup and handles, they're number two. I'm a big fan of the Tom DeMark sequential system. That's covered in section 6. That's kind of what I brought to the crypto space. No one really knew of that trading system, and I kind of introduced a huge amount of people to it. And that's my number 3. After that, I use support resistance lines, prior highs, prior lows, Fibonacci's, trend lines, moving averages. And after that, it's the oscillators, RSI and MACD.
What do you teach people? You know, I'm a big believer in low leverage. What do you tell them to do if they're? Do you tell them to use zero leverage, or what's a max leverage that you tell people to use while trading?
This is interesting because, like, if they're trading traditional markets, I would say zero leverage as well. In crypto, it's different. And by the way, that's not the only reason I don't trade crypto. One of them is because I'm just not in front of a computer enough. The other reason is I don't want to put my Bitcoin at risk. Anytime your Bitcoin sits at an exchange, it's at risk of being hacked, or regulators coming in and just confiscating it, or like the exchange itself can just steal your money. So in the world of Bitcoin, I actually advise maximum leverage, but you basically use maximum leverage so that your stop loss is liquidation of your account, but then you transfer more money in next time you want to make a trade. So you don't keep, like in the stock market, like I'll keep, you know, you can have as much money as you want, and then you.
So you don't trust any of the places that people could trade crypto with your money. You know, we know coming from the traditional world that, you know, I was a commodity broker and I always wanted to be with a clearing firm member, knowing that if something happened to the member, the exchange would make people whole. And it's really the wild, wild west out there. So,
right.
Is there so there's no brokers in your mind that you would trust to hold your Bitcoin?
I mean, trust to a point is just unnecessary. If my Bitcoin is not in a trade, it should not be sitting at the broker or exchange. It should be sitting in my cold storage. So, okay. I mean, I do recommend.
How do you store it? In some type of wallet?
Yeah, you store it in a wallet. There's hardware wallets like USB thumb drives that are, you only connect to the internet when you have to move it. Otherwise, they're not connected to the internet, so they can't be virtually hacked. I mean, I do recommend an exchange. I have that the affiliate and referral section has one of the crypto exchanges there that I do recommend. I trust them the most out of everyone. But again, if
you have a lot of your money at any one of these places you're trading.
Correct, because like, for example, in the traditional markets, the MF Global incident is really an anomaly, but in the crypto market, that's almost the norm.
Okay. All right, so that's really excellent advice, that only put what you need to trade to make a trade in your account. The account is liquidated, your position is flat, always yank the money back into your wallet.
Yeah, that's what I recommend, because you don't want to like lose your account to an exchange hack. Again, unlike traditional brokers, they can't really be hacked because like the money is the dollar is a digital asset. It's just not decentralized, and that's the difference. Like as good as some of these exchanges securities are, a hacker is always better somewhere.
How do you handle taxes with Bitcoin?
Pretty much the same way you would any other speculative asset. So, I mean, the IRS doesn't really.
Using it to buy and sell and everything for your lifestyle, how do they know whether or not? So, what do you have, a basis for your cost, and then every time you buy something, it's like a trade that you have to report?
Not really. For me, I don't. For me, it's just like I cash out in like reasonable chunks, and then I just note at what price I converted it to, you know, a bunch of cash.
Okay. Tom, right. I really appreciate you taking time to edify our community today, and you know, I'm very open to learning about something you believe is not going away, regardless of whether there's a great reset after this great bull market. If we have another 2008, you are confident and even more bullish on crypto as being kind of a haven for people if we have an event like that down the road.
I do.
Okay, so forget about gold. It's a good, nice paperweight, and silver. You prefer crypto 100% over traditional hedges.
Absolutely, because gold is just very hard to move, and like metal detectors have created a big problem for gold as a safe haven to move it, you know, when you gotta get out of Dodge. So a crypto has done that.
Are you an international citizen where you really don't have a main home base, that you're always somewhere else and just living and breathing Bitcoin wherever you go?
Pretty much. I mean, I have an apartment in New York still, but I'm there about 3 months a year, and the other 9 months I'm everywhere else.
Okay, well, you know, I recommend anyone who has an interest in crypto, and definitely educate yourself. And Tone is somebody that I believe has a lot of credibility in the industry. He definitely was forthright with all his answers. Check them out.
My website doesn't have much new info. It's more static, but I do daily YouTube videos about technical analysis. Yeah.
So they could find your YouTube videos if they go and find you on Twitter at ToneVase, or there's a link on your website.
Yeah, ToneVase on YouTube. It's just under my own name. Just Google ToneVase on YouTube, and you'll find my my shows. I'm going live in about 30 minutes with the morning news show, plus my outlook on the price.
Thank you for your time very much, Tone.
Thank you.
Good luck, and thank you for opening my eyes to me. It's like Star Trek.
Well, let me know if you want me back anytime.
All right. Thank you, Tone. ToneVase, everybody. TGIF, I'm glad we had a great week. Remember, don't just count your pips, count your blessings, and check out crypto with ToneVase. See everyone on Monday. Good hunting the rest of the day, and enjoy your weekend. Thank you, Tone.
Bye-bye.